Rishi is ready and is here joining us today from InCred. There is the MD and CIO of their hedging strategy. Rishi, afternoon. Thanks so much for joining us.
Good afternoon.
The
Good
last
to
of the
have
words,
you there.
just before we cut out, Jonathan was speaking of risk. While there is so much of exuberance and buoyancy in the market, we can see. Let's start with the risk. Are you witnessing any risks there?
So honestly, as we all know, the India VIX is at very low levels. And that, is concerning to some, saying that, volatility may spike, and volatility obviously spikes when, there's chances of a larger correction or some panic in the market, etc. But I have a slightly different view. We have had periods in the past where VIX has remained low for extended periods of time. And that sort of whether VIX is at a high level or a low level can sort of become a trend of its own in some sense. So I wouldn't read too much into it. I think it is low because a lot of writing of options and intraday option trading, etc., has really picked up in the last 2 years in the retail side of the market and on some of the local prop shops, etc. So I think that is sort of the technical reason for the VIX to remain low for extended periods of time. I don't think it is really signaling any risk per se to the market. Having said that, I think the momentum has been strong. Markets have risen. They continue to sort of, climb the wall of worry and continue to give positive indications for the near term. Technically speaking, if you see Nifty is broken out or trying to break out of a sort of a triangle pattern. So I think, hitting that 19,000 kind of levels for the Nifty is pretty much on the cards in the very near term. It is possible that it consolidates there for a few weeks or something because it is a significant level, previous highs, as well as sort of a big whole round number. But overall, I would be quite bullish in the next 6 to 9 months.
So you are quite bullish on the markets on the next 6 to 9 month basis. Let's get a view from you, which is a mix of quant, which also looks into how ownership structure is looking at technicals you mentioned a bit, and also about flows. Whenever markets come out of a range of this sort, say 18-19 month range that we are breaking out of, after that the next 12 to 18 months, what kind of scenario usually pans out?
Yeah, so that's in fact a very interesting point you've raised. So the very fact that markets have been consolidating since I think almost October 2021. So what has happened this time is basically a time correction instead of a price correction. And that obviously speaks again of not only medium, but sort of long-term bullish structure in the market. Only then something like this happens. And once you're coming out of an almost 1.5, 2 year kind of dull patch, then the next 2 years, I think, would surprise people on the upside. So the bullishness would probably end up being more than what I'm anticipating in some sense because of that nature. And overall, from a quant perspective also, that was more on the technical side, but from a quant perspective also a couple of key things that we look at. So, what happens is, as we all know, when there is panic in the market or volatility spikes, then the correlations rise, right? Everything starts falling together at the same time. Whereas in healthier markets, you continuously have sector rotation and the overall correlation of stock movements is very low, which means that there is scope for stock picking, right? And that is exactly what we are seeing now. So while the markets have not broken out to new highs, despite obviously having bounced strongly from the lows a few months back, what has been happening is that the correlation across stocks is been low. Therefore, there has been an opportunity for stock picking. And the sector rotation and stock rotation within sectors has been very strong. So you have certain sectors moving for a few months, then you have some other sectors moving for a few months. That is actually the first signal of a very healthy bull market. And that has been happening since the last 6-9 months also, despite overall the markets having been dullish. So those are some of the things from the quant side, which also add to the overall bullish outlook for the medium to long term as well.
Right. You also look at overseas flows, right? We all know about the great India investing story, SIP, the record high, and how domestic investors are moving away. But what about flows from overseas market? We saw we saw outflow 4 lakh crore in the last few years, right, from the FI side. Out of that, just 40,000 crore has come back in the few months. Do you see this pick up?
See, overall, the FI flows, if you look at it for the last many years, is sort of, again, moves in tandem, highly correlated to the overall momentum in the markets. So again, because the last 2 years have been dull and range bound, these flows have petered down to the numbers that you mentioned. But now with the overall markets trying to break out to new highs, you would see those flows start to come back. And as that momentum sort of continues, those flows would build back to the high level. So I think that is the impetus that the markets will get. The domestic flows have been strong, have basically been support to the market, but have also had their phases of higher flows and lower flows. Once the markets break up above 19,000, I think both domestic and foreign flows will be very strong. Foreign flows have been highly correlated to momentum, as I was saying. The moment a 6 month kind of momentum is seen, so 6 month, flow returns of the indices of some of the heavyweight stocks are very good, then you would see a lot of these FI flows coming back. So that I think will start happening again in the next 6-9 month period that I was mentioning of earlier. And then once you get to that period, then you will also have the pre-election sort of buzz starting, which again typically, pre-election 6 months before that, 6 months after that, there tends to be reasonable sort of bullishness in the market unless some bad news starts coming out. But typically, given how the continuity of the government is being expected, there would be some more bullishness, I think 3 to 6 months before that also. And FPIs typically do participate in those.
Saying that market will start pricing in continuation of the current regime and hence it will start kind of gaining on that. Is that also a possibility? Are there any studies of that sort as well, or it's your hunch that you're sharing this?
No. So obviously on the election front, what can happen is obviously, I mean, there are very less data points. That's not easy to sort of quantify. But the behavior around it is something that can be quantified, and that is what I was referring. That would be a sort of a bullish behavior as well and would add to the momentum in the market, which would then give a fillip to the FPI flow. So all of that, the sort of positive causative effect will start happening one by one.
I understand that. Let's also break out the market into market capitalization, and because large caps behave differently, they are more dependent on FII flows. Mid and small are more dependent on domestic flows. They behave differently, and while large cap and mid cap index may have, like banks and mid cap may have made their all-time high, the small cap end of the market is still 15% away from all-time highs. Any thoughts there? Where are flows going and on valuations front?
No, so there clearly a couple of things we look at is sort of the overall, obviously, medium to long term sort of charts, technical charts, what they are saying, and then the overall cycle in relation to the large cap indices. So there clearly, if you look at the ratio of the mid cap index to the Nifty or the ratio of the small cap index to the Nifty, then those are sort of making very interesting patterns which are on the positive side. So that started happening a few months back. In fact, you saw the impact of that in April and May. So not very surprising from a quant and technical perspective. And the good, interesting thing is mid-cap index, for example, has anyway broken out to sort of new highs. So that obviously will end up being very, very strong over the next few months, I think. And the small cap index, while it is away from breaking out to new highs, as you mentioned, but because its relative ratios and relative strength compared to the large cap indices is sort of breaking out and sort of behaving very interesting patterns on the bullish side. So I think that would also end up performing very, very strongly. So I think, yes, over the last 2 years, these have been very dull. The longer the period of that dullness or underperformance continues, once these sort of breakouts and the positive cycles come in, then the period of their outperformance can be much longer than expected. So I think the next 6 to 9 months, while overall markets, I'm saying I'm bullish, but obviously the mid caps and small caps will be even more bullish according to me. They would consolidate at some point. So last 2 months has been very sharp and steep for certain stocks. So they would consolidate at some point. But like I said, healthy rotation across stock sectors is happening. So that way one would keep getting opportunities on that side of the market as well.
Right. All right, Rishi. Great chatting. Thanks so much for your time.
Same
that
here.
was
Thank
Rishi
you.
Kohli of InCred.